and you're watching Monday's Targets in Focus, where we analyse the performance of three currency pairs. Today I'm joined by Jarratt Davis. Jarratt is a professional trader and consultant. He is also the author of How to Trade a Currency Fund. So first of all, Jarratt, today the sterling against the greenback fell throughout the early Asia session as Japanese retail data arrived in softer than expected. Last week there was some positive GDP figures from the UK, and this week there will be some manufacturing and construction data coming out on Thursday. What are you expecting from this data, and how do you think it will impact the performance of this pair?
We anticipate this week being a little bit of a difficult one for the pound dollar, partly due to what happened last week and then obviously partly due to what's coming up. Last week obviously we had the positive GDP data released, but obviously because of all the news about the Prime Minister hinting at the figures early, we believe that kind of rally was a little bit bigger than it should have been. Now that's tempered with the fact that this week we've got some figures coming out. We've got the manufacturing PMI, we've also got the construction PMI. These are expected to be high impact announcements, and the most important thing that we're watching is that they're expected to come out slightly worse than the previous numbers last month. So for this week we see the pound dollar trading quite flat around the 160-100 area for the most part of the week. We're looking at the pound dollar to remain below 160-200 for the coming months. That's a certain fact. We're also looking at it for probably stay up below the 160-200 for the next 3 months as well. With that, there is also very little downside movement. So we're not really expecting it to drop very far, but we're certainly not expecting it to rally beyond that point. Over the next 12 months, the actual outlook is pretty much the same. We expect it to stay in a range between the 150s and the 160s for that period as well. It's quite an undecided pair. And we're not really seeing that changing over the next 12 months.
Now let's move on to the euro against the US dollar. There was some weak German manufacturing data released last week, and many will be watching the US presidential elections, which will take place on November the 6th. Now, how do you see this pair trading over the next few months? And as a trader, what will you be watching carefully?
With the euro dollar, it's a little bit of a unique situation at the moment. Obviously the presidential elections are going to have an impact, but for that pair in particular, our focus is still very much on the ongoing negotiations in Greece and the overall debt crisis actually going on inside the eurozone. So obviously we're going to have one eye on the elections in the US, but for us, when we're placing our trades, making our decisions, that's going to be very much influenced by what's actually going on in Europe rather than in the US. Now, the expectation for the euro dollar this week and in the short term is kind of a slightly negative bias. They're expected to kind of trade back down maybe around the 12800s over the next week or two. So again, overall we're looking at what's going on in Europe, and overall in terms of a technical we're looking at a negative bias, probably down to around about 12800. Over the next month we see the euro to remain kind of at the high end of the 12000s, so just below 13000. The next 3 months we should see we're expecting to see the pair start moving down towards kind of like 12500 area, and then over the next 12 months we're actually anticipating the value of this pair to continue to fall, and we actually expect it to break the 12000 mark, particularly as the crisis deepens.
And finally, what is your outlook for the Australian dollar against the US dollar, and why do you believe this?
The Australian dollar US dollar is an interesting pair as well at the moment. We've got fundamentally, from our point of view, we see the Australian dollar being a solid currency. Particularly in relation to the other G10 currencies, particularly like the US dollar and the other ones like that, because they're in so much more difficulty than the Australian dollar itself. So we expect the value of this to continue rising. That pair, we expect that to continue in an upward direction. Now, short term, we see it's quite range bound. It's kind of hit a bit of a tricky period for that pair. So we don't see that changing this week. So because of that, we expect basically the Aussie dollar to trade kind of between 10400 and 10300. That's where we see that pair trading for the coming week. We don't anticipate it to move one way or the other over the next month. We don't see the pair reaching much beyond 104.50 in the next 3 months. So if anything, it has got a bullish bias, but we don't see it kind of breaking that level. But over the next 12-month period, we're actually expecting to see this pair continuing its rally up and actually breaking and staying above the 10600 level.
Well, that's it for Monday's Targets in Focus. My colleague Monica Gibson will be conducting another Targets in Focus on Wednesday, so make sure you tune in for that. Goodbye.